Hello, investors, and welcome to Fat Profit's first webinar of 2024, Top ASX Predictions. Happy New Year, and hope you are well and looking forward to a fantastic year ahead. My name is Roger Malik, and I am the Head of Client Services at Fat Profits. So today I'll be covering a short session, and we'll be as punchy and short as we can be and try and cover a lot of topics for you, including our predictions for the year. And we'll cover 5 sectors on the ASX, including about 10 stocks and our short-term and long-term market predictions. So without any further ado, let's get straight into it. First thing first, usual disclaimer, all our presentations from Fat Profits are general in nature. We don't provide any personal advice. If you're looking for that, please see your financial advisor. And also, past performance is no indicator of future performance. Now, if you have any questions in today's webinar, I'll be happy to take as many as you can. You can type those questions where you see the orange arrow, and we will get to them as and when the topics allow. So feel free to ask those questions as we go through it. So first thing first, most of you know Fat Profits. I'm sure you've been getting our emails and our content from time to time, but more on that a bit later. First prediction for this year, we're expecting a new bull market at some stage this year, and we will be explaining our short-term view to you first before we see a resumption of a uptrend. So let's have a look at what's ahead for investors. Now, the first thing that all investors are now looking for is rate cuts. This is like, Candy Crush. People are looking for more candy as investors, and rate cuts are currently priced in around March. And if of course the US Federal Reserve are the first to cut rates around March or April, then the markets will start to sense it before that and start pushing the prices higher. But what could stop that from occurring? Well, more on that in a minute, but let's have a look at the S&P 500. Historically, whenever we've seen a 20% rise on the S&P 500, which we saw in 2023, what happens afterwards? So this particular chart shows you from 1950 till now, every time the S&P 500 has had a 20% gain, what happens after in the year following? So typically you see about a 10% rise in the market the following year, as you can see here. And however, the first 2 months are usually weak. So you can see January and February are usually weak. And then there is a bit of a continuation of a trend. May, June is a bit weak, and then so on. Towards the end of the year is when you see big gains. But slow and steady. So far this year, you've seen a bit of a chop. We're off to a bit of a choppy start. And this is the S&P 500 seasonality. So you can see here, January, we're expecting a bit of a continuation of this choppiness, and then Feb, March, a bit more, followed by a decent run for the rest of the year. Now that's historically, doesn't necessarily guarantee that that will happen every year. So there's no, prediction of that. Now what could change the narrative this year? Of course, the big thing that everyone's looking at is inflation. Now, this is the US inflation. It has come down in the last 12 months, but lately it's just ticked up a bit. So that could be the spanner in the works, which may change a few things depending on up or down movement. Now, what is happening right now, I'm going to draw your attention to something which I'm sure you're reading on the news or listening to, is what's going on in Yemen. So there's a bit of fighting going on between forces, and this is the first picture at the top you see is from November 23. This is the shipping route all the way from Asia into Europe. So you can see from China, Japan, Southeast Asia, India, and Middle East into Europe. This is the shipping route. It's through Red Sea. What's happened now that obviously there's fighting going on, they blocked this, and all the shipping is actually now taking place from China, Japan, all the way from Asia from under Africa and around and into Europe. So that's a very long route. And what that is doing is unfortunately lifting the price of goods, and shipping costs are going up once again. And the longer this war goes for, then of course the prices of commodities and goods will continue to increase. So that's no good for inflation. So hopefully they get on top of that sooner rather than later. Otherwise, this inflation that we saw earlier might continue to hover between 3 and 4%, which means rate cuts get pushed out a bit further. And if that happens, then no good for the markets. So let's look at our prediction for the S&P 500 first before we look at the ASX. So as you can see, S&P 500 has a pretty good run from October onwards. They're now at close to all-time highs. So where to from here? Our short-term view is that we expect a 5 to 10% correction between now and the end of March. So at some stage, we are going to see a correction. It may be happening as we speak, or certainly something in the coming weeks. Post that, we expect the markets to continue to run up strong for the rest of the year. Now, if you look at some of the current market indicators, which are telling us the correction is imminent, first one here, you look at market momentum, the S&P 500 and its 125-day moving average. It's starting to roll over. There is extreme greed in the market right now, and usually that's a sign where you want to avoid buying too many things right now. Another indicator is stock price strength, where 52-week highs and lows are also starting to roll over, and you're starting to see new lows being made by a lot of companies. Another indicator is breadth. That's the McClellan Volume Summation Index. That's also starting to roll over. And the next two are quite important. Put and call options. For those of you who know anything about options, put options are bearish and call options are bullish. So you see a rise in put options of late, and that is also a sign of weakness in the market coming up. And the final indicator is the VIX, the Volatility Index, which also recently spiked up, and it's now gone past its 50-day moving average. And historically, when that has happened, last time was September, October, we saw a decent correction in the market. So it'll be safe to say we expect a correction in the near term. Another indicator is US dollar. And when that rises, that also shows weakness in the market. And we know what happened from July till September. US dollar rose, markets dropped, and then post that, October, November, December, US dollar dropped and markets rose. It's now starting to rise again, so that's something to be mindful of. Now that brings us to Australia. Let's have a look at ASX. So ASX, unfortunately, hasn't had a 20% rise in the last 12 months, like the US. However, we have been reasonably happy with November and December, where we saw the markets jump. So what are we seeing now? We're seeing a small correction. Could that continue? Very likely, especially if the US leads the way, then we could see this come down to around about that 7,000 points mark, and then we're expecting solid support. So again, something to keep in mind, and we are certainly looking at certain stocks and holding on before buying those stocks. So that's something we'll discuss next. Now, before we look at the 5 sectors, I have a question for you, and I'm just putting that up on the screen as we speak. You've heard our views on the markets. Let's get your views on how you think the markets will perform in 2024. Will we see a positive run, or will we see a negative return, or you're not sure? Because there's a lot of factors in play. Let's get a bit of a poll to get a feel of our audience today, because we've got several hundred people watching this first webinar from Fat Profits. So let's get some numbers. Okay, I'm just going to close that now. Thank you, guys. There's quite a few responses. And 63% are saying positive returns this year. We've got 22% saying negative. That's interesting. And the rest are not sure. Okay, thank you, guys. That's quite interesting to see your opinions. Now, let's move on to 5 sectors for 2024. So we're going to now give you a few stocks to look at, something you can add to your watch list. So please get your pens and papers handy. I'll be as quick as I can because I don't want to spend too long on talking about each stock, but I'll start off with the first sector for ASX this year that we think is going to be quite strong is property. Now, some of you may already have exposure to property or you're holding off. So let's have a look at a few stocks. First one is Stockland. Now, most of you are familiar with Stockland. As you can see in the picture, they have shopping malls around the country. They also do commercial and residential real estate, and there are many projects in the pipeline as well. So how's Stockland performed over the last few years? Well, long story short, they have been in a bit of an uptrend since COVID lows and a bit of a choppy run in 2022. And of course, last year, they were down for most part of the year. And the lowest point was around October. And we've seen a big jump in November, December, because a lot of people thought now rate cuts are going to happen soon. And we've seen the end of rate hikes. And they still might be right. It's just a matter of when. Currently, we think the share price is on its way down along with a healthy correction. And of course, in the next month, in February, we are going to see reporting season and companies report their earnings. So can we expect further consolidation? It's most likely in the property sector. So we would suggest you add these stocks to your watch list. We've got a hold rating on this stock, and we may put a buy on this when the timing is slightly better over the coming weeks. Next stock is Boral, the construction company. They have gone very well of late. In fact, the last year and a half has been very strong for them. They have more than doubled. So that's been a good performer. The fundamentals are looking very strong. We've held this stock for a number of years, as you can see. We also sold half of this stock pretty close to its peak, around $7.50. And they announced a pretty hefty dividend post that, which is where the drop was, because they sold their North American business. Anyway, long story short, right now it's a hold, and we do think there might be a small correction coming up in this stock as well, and that will present a good buying opportunity. So if you are a member with Fat Profits, we will be announcing a buy when we see the timing better. And the last stock for today in property is one of our favorite stocks, is James Hardie. A huge company, market cap of about 7 billion, both in Australia and overseas, especially in the US. And they've got some solid numbers which were announced last reporting season in August. It is a buy rating from our analyst. They've had a phenomenal last 12 months or so. The stock has more than doubled from $25 all the way up to $55. So if any of you got into this, congratulations. If you missed out, can you still get in? We do think there's an opportunity coming up. Probably not right now, but something for you to add to your watch list. The fundamentals are looking very strong and we like this company. Next sector for you to look at, which is very hot right now, is uranium. And we know what's going on around the world, clean energy. You look at the price of uranium shooting up in the last 12 months in particular, from $50 now to $92 a pound. Do we expect this to continue? Absolutely. Analysts are predicting about $150 a pound, and that would be great for uranium producers. And one of those companies that you can add to your watch list is Paladin. They're a big uranium company out of Africa. That's where the mines are, and they're getting ready for production. So we know that clean energy is the way to go. All the countries around the world are now targeting that. Biden, in fact, announced it only a few days ago. They're actually running short on supply. So this is where, you know, the rubber really meets the road, and Paladin will come into its own. The first production is on track for later this year, and they're on track and on budget. So how's the share price performing with the rising uranium price? Well, as you can see, last year it was around sort of 50, 60 cents. We got in for the first time into Paladin at 79.5 cents around September, and we've seen a 53% jump in the share price since then. Currently, it's looking a bit hot, so we do think caution is warranted before you go ahead and pull the trigger. But a 50% jump so far, we're quite happy to hold on, and we may average it one more time, pending the price movement. But that's a good quality uranium producer. The next sector to look at is banking. Now, I'm pretty sure most of you investors watching this webinar would hold something in the banks or probably held it in the past. So if you look at the likes of ANZ, that's been a decent performer. We've currently got them on hold. If you look at the numbers recently, the dividends have gone up. The earnings are pretty steady. Cash is pretty strong, and the overall net margins are solid. So if you look at how they've been performing, look, going sideways if you put it in the last couple of years, but for a dividend stock, this is quite steady, and we expect the share price to continue to hold well. So banking sector, look, some analysts are now starting to predict that the banking sector might have a bit of a struggle year. We disagree. We do think banking will hold up pretty well. If you look at NAB, on the other hand, that's been a star performer out of the big four banks. Their net profit margins, operating income has gone up by 12.9%. Cash earnings are on the rise, and the dividends to reward the shareholders. So how the share price performed? Pretty well. It's hovering around the $30 mark. And yeah, we disagree with some of the other analysts out there who think the banks will actually roll over this year due to squeeze in profit margins. We think they actually hold up pretty well. So with banking, we're positive. Another sector to look at is lithium. Now, on the other hand, this sector has actually had plenty of worries, especially in the last 6 months. Now, this was the hottest sector for the last 2 years in the market, very comfortably. A lot of people made a ton of money. So what's happening here? Well, if you look at the lithium price, we're now back to 2021 prices. And this is a huge drop compared to 600,000. Now we're down to under 100,000. So yes, some of the producers are taking a hit on the margins. What do we expect going forward? And look, of course, some of the reasons include China slowing demand, manipulation of prices, some call it, also, targeting their own supply, the local lithium, and some even substitutes as well. So look, there's multiple factors going on, but our view is lithium will hold up pretty well. We're not as bearish as some of the commentators in the market. And we've got a number of stocks that we've actually got our eyes on. One of them is IGO, and it's called the Independence Group. If you haven't heard of them, check them out. They're in the top 200 ASX companies, market cap of about $8 billion. They have a big portfolio all around Australia, as you can see here, right from WA all the way down to SA, Northern Territory. They've got, one of their big mines is Cosmos in WA, and they do nickel, lithium, they do copper, they're into rare earths as well. So that's quite a diversified portfolio. And if you look at the overall earnings trajectory, you notice that the revenue has gone up consistently. The earnings before interest and tax is rising, cash flow is positive. So they're actually in a good financial health. However, the share price has gone down specifically in the last 6 months from $15, $16 all the way down to $7. So you're looking at a 50% drop. Now, does that present a good buying opportunity for a good, solid, financial, stable company? We do think so. However, we won't pull the trigger on a buy just yet until we see a little bit of stabilization of the lithium prices. They are in a bit of free fall and a bit of consolidation. But once that happens, we will issue an alert to our members and issue a buy on IGO. So something you can add to your watch list is a good quality operator. And as you can see, we made some money on this over the last few years as well. Now, talking about making money, well, here's the best stock on the ASX last year, Azure Minerals. If you haven't heard of them, check them out. AZS is the code. They're into lithium. The Andover project has been very, very strong. There's been a number of announcements about the quality of lithium, the size of the deposit, and of course, it has caught the attention of many investors, including Gina Reinhardt, who has put a bid along with another company, and they've received several bids leading up to the final bid right now, which is $3.70. And to think we bought this at 10 cents a few years ago, and to get $3.70 just a few years later is unbelievable. So a $10,000 investment here has produced a whopping $350,000, nothing to sneeze at. And last year alone, this stock went up 1,500%. Now that doesn't happen often, of course, but when it does happen, look, we have several happy members who are holding this stock right now. So lithium has been pretty hot. There are mergers happening all around the park, and there are success stories just like Azure Minerals. So if you can get one of those in a year, well, it makes a big difference to your overall goals in your portfolio. Now, before we look at the next sector and give you a few more stocks to look at, quick rundown on Fat Profits. I'm sure most of you know who we are, but in case you don't, well, Fat Profits has been around for 24 years. So it's highly likely you've seen us. Angus Geddes is the owner and the CIO of the company. And we have offices in Sydney, London, and Auckland. And we also have a wealth management division where we manage real money. So what do? We are analysts. We research the market, including Australia, Asia, US, UK, and Europe. And we provide research and recommendations to our investors. So you can become a member by paying an annual fee, and you receive research high quality and also recommendations from the team. We also manage real money. Now, this is some of the team. As you can see, Angus, our CIO. We've got Patrick, he's our CEO of the company, been with us for 24 years as well. And that's myself, Roger, I'm the head of client services. We've got our analysts, some senior people in the company who've been with us for a long time. And we also manage real money. And this sets us apart from other companies who just provide commentary. We also manage about $200 million. And the orange line you see is our portfolio, and the black line is the ASX 200. So since 2007, we have consistently beaten the market. In fact, we've returned almost 3 times compared to the ASX 200 over a long period of time. So this is real money and real returns. So something we're very, very proud of, something we're happy to talk about with investors. Now, what are our services? So we provide strategy, short-term direction and long-term direction to investors, a bit like what you've heard today. We give you stock recommendations, buy, hold, and sell. We do webinars just like this one, podcasts. We send you emails of alerts. When there is a buy or a sell alert, you will receive that in your inbox. We do a wrap of the week. We have an income portfolio for dividend investors, which is very popular, returning 17% a year for the last 10 years in a row. That is very, very strong returns. And we also offer customer service and support. So, for some people who like technical analysis, and if you want to improve on that, in all our reports, you receive technical analysis. So you see support, resistance levels, buy and sell levels, and you can really time yourself into buying and selling certain stocks when we provide you recommendations. Now, currently, for 2024, we have 25 stocks as buy in our portfolio. 7 of them are brand new buy recommendations, first time entry in our portfolio. So these are quite exciting stocks. And Paladin was one of them. That's a brand new recommendation. 13 sell recommendations. So we also tell you when to sell, which is the hardest thing as an investor. And 19 stocks currently are traffic lights. What that means is these stocks are not a buy right now, but we're very close to pulling the trigger. We're just waiting for the right entry point. So these are something you can add to your watch list and you may buy them when the time permits, because we do believe a new bull market is coming. So something to be excited about as an investor. So ask yourself the question, how is your portfolio positioned right now? Because 2024 is here. This is really a good opportunity, and probably you're watching the webinar today because you want to see how your portfolio is shaping up and if there are any adjustments that you may be able to make to get a better return. So this is probably a good time for you to do so. Now with Fat Profits, there's a few things to consider if you're thinking about joining us at some stage. Well, our performance, 16.8%, as I mentioned earlier, nearly 17% a year for 23 years, and nothing to sneeze at. It's very hard to find, and I'm yet to find any company who's done better than that on the ASX. It does save you time on research, and that's one of the reasons people join us. We have experienced people running the show. 7 out of 10 winners, that's our historical stats. We provide you guidance, views, and market direction. And one thing we all hate is cross-marketing and upselling once you're a client. So we pride ourselves on not doing that. And we also manage real money, as we spoke about earlier. So, you've got a lot of reviews on productreview.com.au, so feel free to check them out. We have 4.2 star rating. There's a couple of examples, and you can check out other people's feedback. Many of our members, we have 25,000 members, and many of them have been with us for 5 years, 10 years, 15 years, and some of them even up to 20 years. And, of course, they wouldn't be with us if they weren't making profits. And as Warren Buffett always says, the best investment you can make is invest in your own knowledge. The more you learn, the more you earn. So before we look at the next stocks, and there's a few stocks I want to give you before we end our webinar today, I just want to give you an opportunity to look at our 3 products. So if you're slightly interested in joining our service, then at least you're clear about what we offer. So 3 products are Standard, Premium, and Platinum. Standard service includes daily emails from our CEO, Angus. Those emails include market predictions and commentary. We do weekly members-only webinars, which are very popular, very informative, every Thursday, and they're live, and also recordings are available. Every Friday, we do a Fat Wrap, which is a wrap-up of any highlights that you may have missed out on. So those first 3 benefits are the same in every membership, Standard, Premium, or Platinum. The difference is, with Standard, you have access to 1 portfolio out of the 3. So first portfolio is Australasian equities. That covers Australia, a bit of New Zealand, and a little bit of Asia. So that's our most popular portfolio. Second portfolio is mining. So that's dedicated just for mining alone. So if you're targeting mining stocks, especially small and mid caps, that portfolio will be good for growth. And third is global equities, which of course is international stocks, US, UK, Europe, Canada, Asia. So out of these 3 portfolios, if you're only after one, you can be a Standard member, and that's not a problem. If you're after 2, then Premium is our most popular bundle, and you also get an account manager, someone you can call or email, and they can answer your questions. Platinum is also available for people wanting all the 3 portfolios and the account manager. Now, whichever one you select, they're all tax deductible, and we can invoice them to your super fund or to your own personal name or your trust, whatever you like, and you can speak to your accountant for tax deductions. So that's available. Now, let's have a quick look at the offers. So we've got 3 offers here for you, and all 3 are designed to give you a bit of a incentive to join us today. So Standard, normal price, $13.95. We're happy to discount that down to only $7.95 for 1 year. That is very cheap. And of course, if you do a 2-year bundle, we can then reduce that bit further to about $6.45 per year. And I must say that is a good deal, because $600-700 in the market is nothing compared to the kind of value we offer at 17% returns per year. You can do the numbers yourself. in one good stock, you can make that back very quickly. Like if you got a Azure Minerals, AZS, you would have made that back very quickly. Premium is our most popular bundle, $19.95 for 1 year. We're dropping it down by 50%. That is a big discount. $9.95 for 1 year. So basically, you're only paying an extra $200 compared to a standard membership. And you will have premium. So you have 2 portfolios. You have the account manager. And if you want to get a better deal, you can go for 2 years, where we can drop it down to $7.95 per year, which is fantastic. So that is certainly the most popular bundle for ASX investors. And last but not least is Platinum, which is normally $25.95 for 1 year. We're giving a 50% discount, so only $12.95, or slightly cheaper on 2 years, which is $9.95 per year, and you get the account manager as well. So what I'm going to do is I'm going to just make available the options where you can make your selection. And I know, look, mostly people watching this webinar are usually watching it because they're looking for some advice, they're looking for some guidance and better returns. And this is an opportunity where for a very small fee, you can try us out. Now, some of you are already members with us in the past, and I can see here quite a few ex-members watching this as well. In fact, I've got a couple of questions come through. Hold on, let me take a question. First question has come through from Karen, talking about the markets. So Karen saying that if you see a 10% correction as Fat Profits is predicting, will you be providing the timing of when to buy and which stocks to buy when that happens? So Karen, good question. Thank you for that. Yes, we're expecting this correction before March. And when the end of correction has happened, we will be sending out alerts and emails to our members, notifying them that this is a time to buy. And we will also suggest which stocks to buy. So yes, the answer is you will get a notification as a member. Next question is from Jonathan regarding the deal. Jonathan saying, I'm an ex-member and I am more interested in the premium, but I want to know about the tax benefit. Can I invoice this to my super fund and claim this as a tax deduction? Look, Jonathan, we can't give you tax advice because we're not your accountant, but we can certainly provide you a tax invoice under your super fund. I can tell you from experience, most of our members claim it as a tax incentive, but please speak to your accountant to confirm. However, we will issue an invoice to your super fund. Next one here, we've got, okay, I'm just about to close the poll. Thank you guys for getting quite a few responses. Looks like we've got premium is getting quite a few hits. Okay, I'll take one last question before I want to show a few more stocks. This question is from John. Just bear with me, it's quite a long question. I'm just gonna put some words into it. Okay, John's talking more about the account manager service. So John's saying, if I sign up, what will the account manager do? Will he be able to look at my portfolio and give me some guidance? Okay, so John, the answer is yes. Your account manager is not your broker, so we don't give you buys and sells on your own portfolio, like we don't manage your own money, in other words, but we can give you guidance and we can look at the stocks and give you buy, sell, and hold ratings, and we can answer your questions. If there are concerns about a stock that we think you should look into, then we'll highlight those concerns and let you make a decision. But all the decisions are final and yours. We don't touch your money, we don't manage your money. You're in control of your own finances. We simply are there as a guide to give you some information and then you make the decision, okay? All right, thank you guys. I'm gonna close this now. Thank you for the input. We've got quite a few responses. In fact, I'm just gonna quickly take you to our website. I think you can see that now. And when you become a member, this is what it looks like. You scroll down, you see our latest webinars you can play. So these are the 3 products. We have our Australasian equities, global equities, and the mining. And when you click Australasian equities, you'll see a latest weekly report of a few stocks. We do all our webinars weekly. The new buy recommendations, Karen, they will be placed here. And you can look at our current portfolio right now. And that's the first benefit you get as a member. You look at our portfolio when you log in, and you can match that to your own portfolio and try and work out which one's a buy, hold, or sell, and see if there's anything which you can immediately act on. We send you alerts when that happens. We have that income portfolio for dividends and all our past recommendations. So all this is available in each portfolio for you as a member. Okay, hope that helps. All right, back to the stocks. So last sector that I want to talk about today is retail. Retail sector has had a good run. And if you look at two stocks I'm going to show you now, we expect these stocks to continue to be positive, but these are traffic lights at the moment. So that means we're not buying them just yet, but we will look to buy them at some stage when there's a pullback. So Super Retail Group, I'm sure you've heard of them. You've got BCF, Super Cheap Auto, Rebel. These are some of the brands. Now, how they're performing? Numbers wise, well, you can look at the numbers yourself and realize pretty quickly the numbers are actually pretty strong and they are on the way up. So what's happening to the share price? Yes, it's in a long-term uptrend with every now and again a bit of a pullback. Currently, the share price is very close to all-time highs. So we would suggest you add that to your watch list and wait for a pullback, and we will put a buy on this stock at some stage. And when we do, we will let all our members know. So this is a good quality company, but not a buy right now. And the last stock for today is JB Hi-Fi. Now, who doesn't know about them? Of course, we've all shopped there, I'm sure, at some stage. This also is a traffic light and not currently a buy. But look at the numbers, they are outstanding. One of the best retailers, hands down. And the numbers speak for themselves. If you look at the share price, of course, gone from $2, $3 many years ago all the way to $57 right now, all-time highs. However, caution is warranted. So we wouldn't be buying it at its peak, but we'll be happy to wait for a pullback. So that's another stock we like. Fundamentals are stacking up, so we quite like that. So that brings us to the end of today's webinar. Thank you for your time today. Hopefully you've got some ideas for the short term in the market, some predictions for the year ahead, some stocks for you to add to your watch list, a few buys right now, and a few potential buys in the coming weeks. But certainly keep some powder dry if you can between now and the end of March. And when that correction happens, we do expect to put some buy recommendations, make some money. And if that comes true and you make some money, well, you can thank Fat Profits for a little bit of guidance today, okay? All right, so on that note, thank you guys. I appreciate your time today. My name's Roger, and hopefully we will catch you soon. If you have any questions, please email info@fatprofits.com.au. And if you decide to join our membership, we look forward to welcoming you in 2024 as a Fat Profits member and hopefully making you some fat profits over the next 12 months. All right, bye for now.